And if you guys can hear us, we finally figured it out. Some technical issues, but we figured it out.
All right, hello everybody. How you all doing today?
And if you guys can hear us, we finally figured it out. And if you guys can hear us, we finally...
Excellent. Okay, everybody can hear us online. Well, thank you for joining us for the Ask Me Anything event. Andrew and I are very happy to be hosting you tonight. We're looking forward to your questions. Why don't I start by just, I'll give you a little bit of my background, and Andrew, I'll pass it to you, and you can give people whatever background you want, because people probably know you a lot better. I've been trading full-time for about 2.5 years now. I've been with BBT the whole time. I've been a trader, though, for almost 20 years, off and on, doing different forms of trading. I've day traded in the past, a long time ago, before we had the charts and the systems that we have now, and then I've been swing trading in the interim while I worked full-time in the corporate world. I live in Canada, in Ottawa, and have had the opportunity to meet a lot of the BBT members that we have in a number of cities as we do some of our live events. So yeah, I'm looking forward to talking to more of you here today. Andrew?
Yeah, hi everyone. So my name is Andrew, and I've been I started trading about 6 years ago. And you know, like everyone else, I had a lot of ups and downs at the beginning. But eventually I found my way into trading because I really wanted that. You know, I have a PhD in chemical engineering, and you know, as part of my PhD, I learned how to do research on any unknown, you know, subject. I was eventually, you know, after I learned trading, I decided to write a book about trading, because the book for me was essentially like a dissertation, and it started from introduction all the way up to conclusion. And I published my book back in summer 2015. I started Bear Bull Traders, and you know, just to be a community of traders around. For example, if you have a question, how do you get an answer for your question? I think being part of any community would be really helpful. And it might not do a magic for you, it might not really make you a trader, but I think it's very important to, you know, speed up your learning curve. Like even athletes, professional athletes, when they're part of a team, they're part of an Olympic team, they are really much in a better chance, to a better position to become successful. And Peter is actually very interesting. He was one of the very early, you know, traders that, who was one of the traders that joined Bear Bull Traders, and I'm actually very you know, honored that Peter joined us. I mean, he was, you know, we were very small compared to a lot of big names out there, and you know, I'm so honored that Peter really chose Bear Bull Traders as the community for himself, and he has stayed in the game, and you know, we learned from each other. Peter has his own way of trading. I actually learned a lot from Peter. For example, today he was trading an IPO that I personally never learned how to trade IPOs really. So, and that's one of the benefits of being part of a community. So Peter joined us later as kind of a community manager and moderator, because he's very experienced, and he's having this you know, passion for trading. So I'm really honored to trade next to him.
Well, I appreciate that, Andrew. Thank you. Yeah, I love the community, because it gives us all sorts of opportunities, you said, to see other people's trades, because you know, you're going to be watching a certain number of stocks. I don't care how good you are, you can't pay attention to everything in the market. And it's always great when the members say, hey, you know, I'm looking at whatever it may be, everything from Microsoft to Fiverr, that was the IPO from today, to other stocks, and it just brings it on your radar. You can take a look, you do your assessment, here's what I'm seeing. It really sort of helps you not only in the trade, but understand what others are looking at.
Yeah, I mean, someone mentioned about IPOs. I mean, Matt Weber mentioned about IPO. I personally don't trade IPOs, and that's one of the weaknesses that I have to work on. You know, I see CRWD and Fiverr when IPO, and Peter knows IPOs, Brian knows IPOs. But yeah, it is really exciting to trade them. I personally never really learned how to trade IPOs.
Okay, so let's take a look at some of the questions we've got here. We've got some people starting to post them.
So someone says how to scan stocks. I mean, Ajay Kumar is asking about how to scan stocks. I mean, scanning stocks in play is just, it's a very big topic. For us, most of our community are using trade idea scanners for finding the stocks as gapped up or down. And, we actually do that on a pre-market show. You guys can come and see it for free. Carlos and Norm and Peter are going through our watch list and how we can actually scan the stocks for trading in the pre-market. And when the market opens, we also use trade idea scanners to find some real-time stocks in play. But the short answer is from me is just to come into the pre-market show for free and watch Carlos and Norm and Peter how to define the stocks in play.
Yeah, Matt, you're asking about you're talking about the IPOs. You put a couple comments in here about how to trade them. So I've got a very specific set of rules that I use to trade IPOs. I won't go through them all here other than to say, I have to make sure they've got a certain amount of volume. I want to see them pull back after they open and then go through that after the first 5-minute mark. And then, you've got to take them cautiously, though, because you're right. IPOs, you've got no history, right? There's no information about what the stock may do. And we've seen recently a lot of IPOs that have opened up and they have just gone down. There was, what is it, LK? I think that Chinese, it was the Starbucks, the Chinese Starbucks. I mean, it's basically gone down since the IPO started, as opposed to something like Fiverr that has come up and gone crazy. And of course, we all know what Beyond Meat has done over the last little while. So, you just never know. An IPO can go anywhere, so you got to be very careful with them.
Yeah, someone asked about the brokers that we are recommending, Alliance Trader or CMEC. I personally recommend CMEC because now they come up with the all-inclusive commission structure, which is 0.0065, which is an amazing commission structure for traders, including all ECN fees and regulatory fees. Alliance Trader is also new to the game, and they have some interesting commission structure as well. Eventually you can't go wrong with either one, but I would recommend CMEC.
So, Jayesh, you're asking a question. We sort of talked about that at the beginning, but I started trading full-time 2.5 years ago, but I've been actually trading off and on in different forms for about 20 years. And as Andrew said, he's been trading for the last 6 years as a day trader.
Jean Rivera is asking a very good question. How does a day trader apply for a mortgage or loan? Because that's some sort of not an employment. So I had that problem, Jean, and I like to mention that because I had a 9-to-5 job until last year. Because again, as a trader, it was really hard for me to get a mortgage. Banks see day trading, first of all, very risky, and second of all, they see that some sort of self-employment. So you have to show at least 2 years of consistent results so they can actually approve you for a mortgage. But yeah, employment is much easier to get that. But like any self-employed or business comes with pros and cons. Mortgage is definitely not an advantage for day traders.
Yeah. Faria, you're asking about the best process to keep track of all your trading expenses and trades to prepare your next tax return. So, well, look, that's a tough question to answer because it depends what country you're in. I don't know of any software that sort of incorporates everything, but you have to consider if you're looking to try and day trade full time, you need to consider it a business, and essentially you need to keep track of your expenses and manage them just like you're running a small business. Now, from a trade perspective, your broker should be able to provide you with a full list of the trades and all the detail you need on that for your trade P&L. Your other expenses, you would manage them just like you would, any small business. There's lots of software out there, the software packages that can keep that for you, from Quicken Books to, others.
Yeah. Nikolai is asking a very interesting question. He says that I'm not processing all the information on the chart, and I'm very short biased, and any advice. So my first advice is, Nikolai, short and long really doesn't matter. If you flip the chart, the same setup should really work for a long position. I mean, really, if you flip the chart, short and long, both the strategies should work in the same direction. And not processing all the information, I think, really comes from experience. I mean, like a doctor or surgeon or an engineer, after experience, you build these muscle memories. I really love to have that magic formula to give it to you, but there is really none, in my opinion, and it comes with experience, showing up every single day, being on a simulator every single day. You rarely see any of us moderators and full-time traders miss any trading days, because we just have to be there. You have to be present. So that's my comment on that. Peter, if you want to add anything.
No, I'd agree with that statement.
So David Ull is also asking a very good question about how do you approach the stock that are gapped up or down, and this is very important because we discussed that many times. A lot of people have some sort of a rule of thumb that if the stock is gapping up, I never short it, I just go long, or if the stock is gapping down, I definitely want to go short. I personally don't have that bias. I think I wait for the first few minutes, 5 minutes, and see if the opening range is to the downside or to the upside. Obviously, when the stock is gapping up strong, so that's for a reason. People are getting squeezed and shorts have to cover, so it's gapping up for a very good reason. So you got to be a little bit more careful not to get a squeeze. But there are a lot of examples, like even today, Lululemon gapped up 6%, very strong earning, but sold off at the open and came down about a couple of percent and eventually bounced back. So you can short stocks that gapped up, or you can actually go long stocks who gap down. I personally don't have any idea, but be careful when the stock is gapping up. Be careful, don't short it, or if you want to short it, you have to make sure that you don't get stuck in a very strong move upward because the stock has gapped up for a good reason. Brian has a tendency of not to take a trade against the direction of gaps. So if gap up, he prefers to go long, or if you gap down, he prefers to go short. But again, I personally don't have that bias. Peter?
Yeah, well, I do end up, I'll give you a slightly different answer, maybe just to show you there's no one way to trade the market. So first, we only generally trade gappers, right? That's what we look for in the morning. The whole point is to find those that are moving, and that's what we use the gappers list to try and identify those that have moved pre-market because they're more likely to be in play. Now, I generally love to trade things where the direction of the gap matches the news and the stock trend is also going in that direction. So if you get strong, so Lulu's a great example today of one that I didn't like so much because it had good positive earnings. The stock was gapping up, but then the market opened and it started to move downward, and not just the normal little pullback, it started to go down and trend down. So that's one for me. It didn't ideally meet my criteria, and I sort of moved on to other stocks. So Andrew's very good at being able to ignore the trend. I'm not so good at doing it. I like to try and match everything up, right, where the trend's going with the gap, going with the news, and then I feel much more comfortable in taking a stock. I know a pullback is likely to be a pullback and not a reversal, things like that. But there's never any firm rule. You have to take each stock as it comes and really watch the price action as it's moving.
Jake is asking a good question about, as a new trader in the simulator, what should I look first, and how does the commission works? So I have a couple of suggestions for you, Jake. Because Carlos is also trading on CMEG on a small account, I recommend you watch a workshop that Carlos recently did on how to grow a small account. I think it should be available on YouTube. It's also in our education center if you're part of our community. Another thing that I wanted to mention is when I started trading, the commissions were $10 per ticket, per trade. $10. So in and out was $20. It was almost impossible to trade with a small account. Now, 6-7 years later, we have commissions as low as 0.0065, eventually 60% of a cent per share. These are an amazingly low commission, and commission really has become irrelevant for traders. Even for a small account, if you trade well, commission has become really negligible, in my opinion. Unless if you have $200, no. But if you have $5,000, $4,000, still, if you trade well, the commission is really not that big of an issue. So don't try to stay too much into the commission. I know sometimes it sucks, but if you trade well, commission won't be a big problem for you. Focus on the process of trading. Commission is like, imagine a surgeon who wants to go into the, surgery, and then he look at the blood and says, oh, blood, I can't do my work. I mean, blood is part of a surgery. I mean, a part of a practice of a medical doctor. Just the same as commission and fees. These are there, and you can never get rid of them. So you just have to make peace with that and just learn the process and do your job as a trader.
Yeah, agreed. Jake, I also want to say, you're asking about where should you start. It is tough to figure out where to start when you're just getting going. Step one, you have to get some basic education, right? Try and understand the basics of how it all works. A number of strategies, understand just generally how the markets start to move, and start watching, right? That's the first thing you can do, is get yourself a simulator account so that you can actually start watching the markets. Join a community where you can sort of get other people's feedback and information. And I would say, actually, if you go to our YouTube feed, there's a great video on there recently posted by Robert that gives you sort of a trading plan, almost like a business plan for your trading strategy. That's a good thing to look at, because there'll be a lot of stuff you won't be familiar with in there, but it'll give you all the clues of the things you need to figure out to add to your business plan to be a successful trader long term. What is my strategy? What am I setting my stops for? What is my risk per day and per trade? All that stuff you need to start thinking about. So use Robert's video. It's fantastic. It should be near the top of our feed. And then when you go into the simulator, the last thing I'll say is, don't overload yourself. Focus on just one or two stocks maybe to start with, and focus on one or two maximum type of patterns that you're looking for. And you may watch all day and those patterns may never happen, but it's going to allow you to start to identify specific patterns. And if you find that you're not finding those, move to another one. If you're finding lots of them but you don't like them, then you can move to another one. But start somewhere that's manageable, that you can control.
So Clarence Sent Pro is asking a question about 5-minute opening range breakouts, and he says, I read in your book about 5-minute opening range breakouts, but it seems that you take a lot of 1 or 2 minute these days. Does it mean that these 5 minutes are not working anymore? So this is something that I have to explain to community, that I'm trying to trade in the first 5 minutes because I want to get better at it. Still, there is a lot of my trades go wrong in the first 5 minutes because just the nature of this volatility at the first 5 minutes. But a lot of times, the trades that I take after minute 3 or 4, still they are doable to do at the 5-minute opening range breakouts. I just I have a tendency to jump out or jump in a little bit too early. And I think it's still 5 minutes and 10-minute and 15-minute opening ranges are still working if you trade them well. I mean, obviously, if you manage them well and if you trade them well. But I personally want to get into first 5 minutes a little bit to find some interesting entries in the first 5 minutes. Definitely not in the first minute. You never see me trade in the first 1 minute. But after 1 or 2, 3 minutes, I like to try that. But that doesn't mean that 5-minute opening range breakouts is dead. And this is 5-minute opening range or 10-minute opening range is known for decades. It's not a new strategy, and everyone knows that really. AD is asking a question. What's your take on day trading VID stocks? And this is important. I want to emphasize that, and then I hand it over to you, Peter. Remember that sectors are important, but they're usually active for a certain period of time. We don't trade VID stocks anymore. 4 months ago, we traded CRON or all of these VID stocks every single day. The market usually, based on my experiences, has these certain pockets of money that goes into different sectors. If you remember back in 2017-18, the Bitcoin and cryptocurrency was just on fire. Anything that had a name of crypto or blockchain, it was just going up and down, and we were trading those stocks every single day. And then later they died. The FANG stock, technology, Google, Facebook, they came in, and then we were trading them every single day. Those guys died, and now semiconductor came in. Semiconductors when the energy sector came in, and now it seems that some other sectors are active. So it's really, really important for you to see what sector is active active in that particular, in the past. You know, VID stocks, when the people are not interested in the VID stocks, the money is actually flowing somewhere else. So always follow the money. Peter, is there anything you want to add?
I was going to say the exact same thing, right? Right now, I don't trade a pot or weed stock any different than any other stock. If it's active, you know, if it's in play that day, then we'll trade it. If not, then I won't. But I don't treat it any different. Right now, the hot sector is, well, it's a sector of only one company, Beyond Meat, that seems to be, you know, on fire right now. But, you know, eventually, Beyond Meat will just become like any other stock, just like Andrew was saying. So, yeah, don't trade them any differently.
So Frenzy Profit is asking, what's the average holding time for your trades and what's your average stop? For me, usually average, probably it's between 10 seconds to 4 or 5 minutes. I mean, that's I'm usually in that range. Brian is sometimes a little shorter, sometimes longer, but that's for my average. Peter, what's yours?
You know, mine goes anywhere from 20 to 30 seconds to 6 hours.
Yeah, really, I don't have that number. And the average stop loss really depends on the price of the stock. But for the price range that I'm trading, usually between $10 to $100, I usually don't let more than 15, 20 cents stop loss. But depends. I mean, when you are trading a stock at $15, 20 cents can be a lot. So depending on the number of the share that you're taking, you can actually give it more room or less room. But you don't want to have a stop loss of 2 cents or 3 cents because the just normal fluctuation and the spread of the market, you have to give it some room, especially when you're trading the higher price stocks. It's just the nature of that fluctuation in day trading. So don't put a when I'm saying a tight stop, means I don't mean just put absolute 1 cent minimum. It's just you have to give that the fluctuation to that.
Yeah, I'd agree with that. You can almost never set a stop for less than 5 cents because, as Andrew says, just the spread and the fluctuation could take you out too early. I do a risk-based trading strategy where I will use technical levels to set my stops on really stocks that are moving heavily, like BYND, right? Beyond Meat is maybe a good example, or Tesla. I might set a dollar stop. But my expectation of return is going to be $3 to $5 on that trade. So it's all dependent on the technical level, though, right? I've got to find a level that's relevant, and that'll determine where the stop is. So, it's all specific to the trade and the stock.
Yeah. So Maher Al-Halabi is asking, during the pre-market show, sometimes you say the daily chart looks really bad. Well, what do you mean? What makes a daily chart good or bad? So to me, a daily chart, when it's really near breaking out of a 52-week high or 52-week low or all-time high or all-time low, it's a good daily chart. It means that I have very clear levels that is going to trade near those levels. But if I see a daily chart that all of these candlesticks on a daily chart are all to each other and you can't really find any clear level up and down in any near important levels, I don't like the daily chart. Or sometimes when the stock is gapping a lot, every single day gapping up for 3, 4, 5%, usually like foreign stocks like Toyota or Chrysler or stocks that are really trading outside of US. So those stocks are really difficult because you can't really find any level. Those are the stocks that have, the value of the company is changing by exchange rate every single day.
I think it also depends on the sort of the way the stock is trading in pre-market, right? You don't want to see a lot of big gaps. Sometimes you get stocks that have big volume, but then when you look at the chart, you realize there's a couple of big block trades. And Carlos is usually good at pointing those out if you join us on the pre-market show, where you could have 400,000 shares traded, but if it came in 200,000 share blocks, then that's really not tradable. Foreign companies will do that a lot, for example.
So Sheila is asking a very good question, and she says, how many strategies one person need to become a successful day trading? I mean, that's a very good question, Sheila. I think only 1 or 2 is enough to become really a full-time trader and make a living out of that. And people, I really believe people are taking this way more complicated than it is, the trading. I mean, look at my trades. It's usually opening range breakouts, either 5 minute or 3 minute or 10 minutes, or it's just reversals. I mean, I don't need to trade a lot of different strategies. I explained some strategies just to give you some idea of what kind of trading you can have. But most of my trades are either reversals, VWAP reversals. I even don't do extreme reversals. I do VWAP reversals or opening range breakouts. You don't really need a lot of complicated strategies to become traders. And that's, I think, one of the traps that most of the traders fall into. They think they have to just make it more technical and more complicated to make, it's just really not that complicated, in my opinion, at least.
Matt, you're asking about scanners. Look, there's lots of scanners out there that you can use to try and find stocks. In the room, we use Benzinga. We've got a partnership with Benzinga, and they have a great sort of news feed that gives us immediate information as it comes out. I also use FinViz, which is FINVIZ.com. It's just a free news service that allows me to look up news. And then you can always get news through there's StockTwits, and I mean there's all sorts of places, right? So it probably doesn't matter. Like one thing you have to acknowledge, at least in my opinion, you're never going to get the news as fast as the professionals sitting on Wall Street. So if you're trying to trade immediate news moves, that's dangerous, because somebody's always going to be ahead of you in the trade, and you're never going to sort of be on it fast enough. You're better off to trade the technical patterns in the stock and the chart, and be aware of the news, certainly, but don't try and like jump right on news, because those things, especially if it's really heavy news. I mean, we saw a couple today, I can't remember the symbol, where there's rumor of a buyout, the thing jumps up by $5, but then it retraces that immediately, and if you bought near the top, you were stuck. So.
Yuri is asking about his experience. Yuri says, I'm trading with Centerpoint and DAS, and I'm trading penny stocks, and he wants to make a transition to our style of trading. I mean, Yuri, I know you talked with Marek on Twitter. He actually mentioned that to me. I mean, we never trade penny stocks. I mean, not never, but I mean, we try to stay away from them. They are just very, very difficult to trade, and they're very difficult to manage the risk. I mean, that's the main problem with them. I mean, you can trade them, but you can't really manage your risk. The type of stocks that we're trading, the higher float stocks and high prices stocks, I'm not saying they're easier, but they're easier to manage your risk. You can get out with a small loss, but in a penny stock, you can just dump on you and then you blow up your account. It's not really that complicated. If you have the experience, you just need a little bit of a muscle memory of the price and how to set your share size and stuff. You can't take a 5,000 or 10,000 shares on a stock like Tesla, so you just have to practice a little bit with the new numbers that you have to deal with. But I think for someone like you who has experience, I think it would be a much, much faster learning curve. So that's my suggestion to you. And feel welcome to try out our community. But I just don't want to give that impression that we want to sell you something. It's just see what community and that the personality of that community really works for you and fits you. Mustafa is asking, do we log your trade? I personally don't. I don't log my trades, but I think TraderView has been a software that people are using, and they have been really, really happy with it. I don't know, Peter, are you logging it? I know you have a nice journal.
Yeah, so I log my trades a couple of ways. So one, I keep just a spreadsheet of all my trades. Two, I do keep an actual journal where I take notes and the stocks and I mark them up, and I just do that in a simple PowerPoint template that I use. And then third, I download all my trades into TraderView because it gives me analytics and data about it. So I actually do it 3 different ways, but they all link together and they give me different views. So yeah, I spend a lot of time logging my trades because I learn a lot from them and reviewing them.
Yeah. Putin Wheel is asking, when you say a VWAP has a stop loss, are you using VWAP at the time of entry or evolving VWAP? Obviously evolving VWAP. So the more the VWAP is evolving, so you adjust your stop loss for sure. The current number of the VWAP. And remember, when you enter a trade, your stop loss might be VWAP, but 5-10 minutes when you had some partial or exited some of the position, then your stop loss definitely has changed to break even or to another level. So you don't keep your stop loss forever on one trade. And you usually change your stop loss, at least in my strategy, after some partial. Gene is asking, when did or what things happened that you knew you could do day trading for a living? So for me, I really wanted day trading. I just the moment that I started trading and losing my money on it, I knew this is something that I want to know. I mean, I have that mentality that I like to, just the concept of financial market and trading is just amazed me from the beginning. But when did I know that I actually can do it for trading? I kept my job. I mentioned that earlier, that I had a full-time job, 9 to 5 job until last year, September. I was trading in the morning. I was really fortunate that I'm in the Pacific time zone in Vancouver, so I can trade 6 o'clock all the way to 8 o'clock, and then I go to work and I be at work at 9 o'clock in the morning. And I was really fortunate of that. And I know not a lot of people can do that, because when the market is open, they have to be at work. But for people who are in the West Coast, the timing is just perfect. You just have to get used to waking up early. For me, I knew I can do it full time, but I really wanted to get the mortgage, so I kept my job, and I really wanted that job. I kept that, so I applied for mortgage. I bought my place, and then I quit my job and I just focused. And as you see, I do a lot of traveling. So it really depends on you. And I, when I started trading, I was really young. I had no kids. I had a very supportive partner. So, not everyone can actually do that. So I'm saying that I was very lucky and privileged to be able to survive the learning curve, and not everyone can. So that's something that you should definitely remember that. Anything, Peter, you want to add into that?
Well, I was in a different situation because I'm in the Eastern time zone, so trading is right in the middle of the business day. In my case, I had the opportunity where I essentially was able to, I decided to sort of retire from my work. I retired very young, and I've always loved trading, and I decided I wanted to do it full time. I'll tell you honestly, though, I am 2.5 years in, and I would not say I'm at the point where I am making a living from day trading, right? I am paying the bills based on all of my savings and my money. I'm making money at day trading, but certainly not enough yet to supplement the salary that I was used to. And keep in mind, I was a senior executive in multinational corporations, so my expectations might be a little lofty. But I want to caution everybody. What Andrew said is very relevant, right? Day trading is fantastic. There's lots of opportunities there, but don't go quitting your job and say I'm going to be a day trader. I would not recommend that for anybody, because it's high risk and you put a lot of pressure on yourself. And they say, for instance, scared money. You don't want to trade with scared money. And as soon as you quit your job and you're going to be dependent on making an earning from day trading, your money's scared. So, be careful with that. I would suggest really that you take it slow, trade when you can, and if that means you're trading certain hours of the day, let's say you can't make the open and you're only trading the afternoon, which we can all acknowledge is maybe not the best time to trade, but there are trades to be had. You just have to learn a style that's going to allow you to be successful then. Do that. But do a way that you fit trade. I think, Andrew, you like to say this, right? Fit trading into your lifestyle. Don't make trading your life, and that's really important.
Yeah, exactly. And if it doesn't work out for you, it's just not the end of the world, really. Trading is a business, is a challenge that you take on. If it works, it's great. If it didn't work out, so you move on, and the next challenge, the next business, we're going to be successful. So Steve Burke is asking about time and sales and how we can actually utilize it for opening ranges. I know, Steve, you and I had a phone conversation a few days ago about that. It's just beyond the scope of this Ask Me Anything. I think it's very technical. Let's keep it for the chat room. I try to put some thought on that, and then maybe we can take it later. Sheena is asking about for intraday trading, what type of fee structure is good? Is it per share or it's per transaction, and why? So for people who are trading low float stocks, when they're taking huge amount of shares, like when the stock is $1 or 50 cents, sometimes you want to take 20,000 shares or 30,000 shares because the stock is really cheap. For those type of stocks, it's really good to go with a flat fee. So you pay $2.95 or $4.95 per trade, so you don't care about the number of the shares. But for the type of trades that we do, like 200, 400, 500, 600,000 share per trade, it's good to go with per share, because when you scale out 200. When you trade Tesla, you want to take 200 shares of Tesla. Why do you want to pay $5 when you can actually pay $1 per commission? So it depends on what type of trader you are and what's the average share size that you're trading per ticket.
Yeah, I want to reiterate that, because you've got to think about all sides of your trade. This is one of the things that I find that confuses people. So when you take a trade, When you get into the trade, there's a commission to buy the shares. But when you get out of the trade, if you do like a lot of us and you partial, so let's say you take 100 shares to start and then you sell 50, then you sell 20, then you sell 10, then you sell another 10 and another 10, right? That's 6 trades right there. So when you're paying a per trade fee, it adds up quickly. Per share, you don't really care how much you partial because you're going to be paying a rate per share. Now some people are all or nothing, right? You get in and you get out. We have members of our room that trade that way. You can consider your commission differently. But I'll go back to something Andrew said earlier. Understand the commissions. It shouldn't be the primary motivation for picking a broker or for how you manage your trading, because the commissions are so low nowadays that, you know, if it's really affecting your profitability, you really need to look at your trading. There's probably something there you need to fix or tweak, because it shouldn't be more than a couple of % of your profits on any given day.
Yeah, I agree. I mean, I've seen people emailing me. You know, I had one person email me and he said, I lost $4,000 in a day. And then he was so angry at the commission and he said, I'm going to close my account and change my broker. And I said, I mean, man, you lost $4,000 on just one single trade and you're worried about $4 commission. I mean, your problem is really not trading, especially that these days it's just unbelievable. The commissions are so low. And even CMEG recently has changed its commission structure from $295 per ticket. Now it's changed to 50 cents per ticket minimum. It's just unbelievable. And I recently got an email that someone said, I mean, it just made a huge difference in my account. Chris is asking about opening an account with CMEG, and have you had any problem with taking money from offshore accounts? I personally never had, and I've never seen anyone who has had trouble taking their money out of these offshore brokers. Specifically CMEG, I know them, I've been in touch with them, I talked with their CEO, and I see really they have been committed to a very high quality service. But that doesn't mean that they are forever. I can't really say forever that they're gonna be amazing. It's just I don't know, but so far nothing has happened to anyone. None of the offshore brokers, I mean the most famous ones like Shore Trader, Alliance, or CMEG, I've never seen any issue with them. And the way that these offshore brokers work is your money is actually in the US. These offshore brokers, they have a bigger account with one of these brokers and clearing firms like Interactive Brokers. CMEG might have an account with them, so your money goes into that account, but they are the owner of the money and they assign traders to that account. But if you have a lot of money, I mean, if you have, for example, $50,000, you don't need to use any offshore broker. You can just use the famous Interactive Brokers or Centerpoint that your money is in the US. But if you really have $4,000 or $5,000, even, God forbid, something happens to your money, you can recover from that. I know it sucks. $4,000 or $5,000 is a lot of money, but it's not life-threatening, or so to speak. So I personally don't keep a lot of money in my offshore account. If I have any, I don't have any at this moment. But if I grow my account in a way that is more than $25,000, I eventually withdraw and go to one of the U.S. brokers that I know they're safe.
Yeah. Nevin Raddick, you're asking, how do you recognize machine high-frequency trading? So, look, the machines are trading almost every major stock. So first acknowledge that, right? The machines are all over the place. So they're going to be in pretty much anything you want to trade. But that's not really a problem, right? I mean, really, the thing you want to avoid are stocks that are only being traded by the algorithms or the high-frequency trading, programs. Those you can usually identify. Those won't be the ones that we generally trade in our room, but you'll be able to see them out there. Look at GE on any given day, for example, right? You'll be able to see it. Usually you see little candles that are only like 1 penny tall, or they're like half a penny tall. Like humans can't trade in half-penny increments, right? So you can tell that when that goes on for 5 or 10 minutes, that really that's being taken over by the algos, as we like to say. But people worry a lot about that, frankly, and there was a lot of concern, especially a few years ago, right, when it became more prevalent in the market. It isn't a huge factor in a day trader's life, at least in my opinion. Know it's out there, know it exists, but generally, if you stick to the highly liquid stocks that are in play in any given day, there's going to be enough sort of retail activity where the trends will work, and you don't really have to worry about the high-frequency programs, in my opinion. Andrew, different opinion?
No, it's great. So Emily Dance is asking a question that I love that question, and I want to emphasize on that. Why do you never seem to push a winning day? you're consistent, but don't seem to have an occasional big winning days. And I love that. I want to emphasize that again. Emily is asking, why don't you push a winning day? I mean, I think one of the reasons that I'm consistent is I stopped trading after my trading profit goal has been hit. And this is very, very important, guys. I mean, a lot of people are asking me, how come you're always green? And my answer is simple, because I stopped trading when I'm green. I mean, I'm not of the opinion that you have to sit down and trade all day. That doesn't mean that there is no trading opportunity. It's just that's enough for me. I want to step away after I made money. Like today, I mean, I made my money. I walked away, and there was an IPO of Fiverr, opened at $25, went all the way up to $50. So there could be a lot of money to be made on that. Brian just called me and he said, oh, I made money. Peter mentioned that in the chat. But I don't want to be on every single move. You know, when I make my money, that's just enough for me. That's my style of trading. I step out. I want to enjoy my life. I don't want to have the stress of trading all day. And it's just, I want to have that small, consistent profit into my account. That doesn't mean that you should do it. But based on my experience, whoever who really wanted to push the market and trade, he says, oh, I figured out the market. I want to trade all day and I want to make profit after profit. They usually give it back. I don't know the reason. It could be the time of the day. When you go more into the afternoon, everything becomes choppy. Your mind is probably more tired, and the strategies are not working, the volatility going. There's a lot of reasons. But if you don't believe me, just keep trading and lose all of your money, and then we can have a chat later next week about that. My opinion is, when you made your profit, a reasonable profit target, again, a reasonable profit target, I think you should step aside and enjoy your day and refresh for the next day. Same as a loss. When you're having a max loss, you should step away and really be careful not to get into the revenge trading and start just eating up your account. Some days are not your day. I mean, even professional athletes, they're not ready. Some days they just can't do it. You have to accept the defeat, go recover, rest, and just come back at it. Peter?
Look, I agree with most of that. I mean, I'm an all-day trader, so I tend to trade all day. But to Andrew's point, you've got to know when you're having a good day or a bad day. And frankly, the way you trade at different times of day has to change. Andrew's an expert at the open, so that's what he trades, I think, primarily, and it works for him. I've got different strategies that I use middle of the day and in the afternoon because it requires a different trading style. I don't change my risk per trade, but the way you have to trade and the way you recognize patterns, I believe, changes at different times of the day. So, look, one of the hallmarks of Andrew's trading, as he said, is consistency, and I think that's a fantastic thing to see, and that's why it's good that we have a number of different moderators in the room, because you can sort of see different styles and different approaches to the market because we all see it slightly differently. But I mean, those big days, they make good headlines, don't they? Hey, I made $50,000 today. What people don't realize is there could be days where they lose $50,000 or more, right?
Yeah.
And avoiding that is critical to your long-term health as a trader.
Yeah, honestly, I think showing the P&L is one of the most misleading aspect of trading industry and education, and I hate showing my P&L. I've just started, because I've done it and I have to do it kind of as a start to me, but I think it's just the most irrelevant thing that people in financial industry can do. I'm not really keen on showing P&L and stuff. But anyways, so Peter, because we don't have a lot of time, what about just get the quick answers and then we go one you and one me, so we don't have to answer that. So for example, someone asked me, when you are traveling, I don't know, is it Nikolai that asked it? So Nikolai is asking, when you're traveling from a hotel in a different country, do you use your IB account or you have to have an offshore account? No, you can use the same account that you have, but sometimes some IP addresses you can't connect to your DAS or broker account because just the security of those things. So I remember I was in France and I couldn't connect to DAS because those IP addresses were blocked just for the security reasons. Sometimes you just have to check with the broker that if the country that you're traveling, it's not flagged as high risk or something, so you can actually make sure that you can actually connect to your account. But no, you can travel anywhere in the world and trade with your IB account in Canada or US. So Peter, do you want to take the next question?
Yeah, sorry. Why don't you take the next one because I've lost where we are in the flow. I was flipping back and
So
forth.
KRL index says, are there signals that tell you a stock isn't in play anymore that day? Volume dies down. Yeah, so volume is definitely one thing that you want to watch. If the volume is down, there's no time and sells going on, the stock is really not in play. And when you look at the chart, it's just candlesticks chopping up and down next to each other. That's the main thing. Yeah, I consider myself, Dan, as a scalper. Really depends how you define. Scalping is some sort of day trading. I consider myself a scalper more than a trend trader or position holder during the day.
Yeah, and that stock operator, your question is sort of the same. I mean, the first 5 to 15 minutes, you tend to scalp just because it's volatile. But I've taken trades in the first 5 minutes that I've held for the next 6.5 hours, right, for the entire market. So, you know, it basically depends if the trend continues and if the stock plays out.
Someone is asking, Matt is asking about market makers and breakers, and you watch them, and if you can, you really want to learn anything from that. So I personally don't think that market makers are sitting out there to just take my 400 shares money. I really don't believe that they are so so jobless to sit around to look at my specific order to get my money. They're really doing something else in a higher, pace. But I look at level 2 sometimes to get a confirmation for trade. I don't trade based on level 1. I don't trade based on level 2. But I do look at level 2 sometimes to get a confirmation. When I see a big ask or big bid, and if it's really significant, sometimes I take that trade. But I also look at other parameters like price action, volume, chart, where is the VWAP and stuff.
Andrew, the next one's directed to you, so I'll let you take that about your average share size.
Which share size, I'll try to mention that again, but share size is really something that depends on person to person. People trade with different account size. So if I take 1,000 share on Roku, doesn't matter that, really it's not helpful for you guys. Because people are trading different account size, and that can be dangerous because share size is your number one risk management parameter, and you have to define how much of a position you want to take in that. If I take a big size and get hit by a big loss, I might survive, but you can't. So I don't want anyone coming to me and say, hey, you said 1,000 share of MU and I blew up my account. Why did you do that? So, you are responsible to managing your account because that's your money, and share size is the number one reason that you want to make sure that you have it right. But what I do is, which I think the question comes from that fact that, the position sizing is very, very important in risk management. And I try to explain that in class 5. And I also try to explain it during the trade that I'm saying, okay, I'll go a small size so I can add more. Or if I go heavy, I'll say sometimes I go all in because I'm very 100% sure in that trade. But really, the number of the shares, same as number of the profit and loss, really is irrelevant to traders.
So whatever, you're asking the 5-minute orb, do you take into consideration the SPY and the news and the general market direction, or just wait for the setup? I would say, yeah, absolutely. You should be aware of that. You understand what happens, but the trade is going to be based on the setup, and you trade the setup.
So, sorry, did you answer that? So should we go to the next?
Yeah, we'll go to the next.
So Jeff is asking about the indicators. Yeah, we don't really, for day trading, I personally don't use a lot of complicated indicators. For me, moving averages and the VWAP and price action is enough. But that doesn't mean that that's the only way. Again, there are millions of ways of trading, and it's just up to you. But most of our community members are trading simple indicators. And I really believe that you should keep it simple, especially for fast trading. You don't have a lot of time to analyze a lot of indicators.
Sheila, you're asking a great question. How important is it on having diversified, people, the population in the trading communities? I think it's actually very important because it gives the different perspectives, right? We've got people in our rooms from all over the world that come from all walks of life and all different situations. So, men and women who have decided to undertake trading for their own reasons, but we're all here, trying to perfect trading so that we can get better at it. And I think that diversity of opinion and perspective is extremely important. I mean, if anybody wants to try our room, we've got a couple of codes the guys are putting in here. By the way, just if you want to try short term, I'm not going to try and sell you anything, but there's codes like YT20 is the simplest one, YT20 or pre-market 24. Use those. It'll give you a discount. It allows you to just come in and give it a try. See if our community is right for you. We really want to make sure we've got an environment that's friendly and welcoming to everybody out there. And, we want you to be able to just try it, see if it's right. And if so, then maybe you'll stay with us.
Yeah, definitely. I mean, when you're joining any community or any course, don't commit a big amount because a couple of $1,000 is a lot of money. You just test it out, see how it goes, and make a decision after that. There was a question about trading after hours. I personally don't because I usually am out after I'm done with trading. I'm usually out. But there is a lot of good opportunities on the after hours. There are some strategies for earnings and stuff, but it's just not my style, Steve. And NG is asking about Forex or futures. I don't trade Forex and futures anymore, but I'm really playing around with options because I really like to learn options. They're very interesting, and I think there is a lot of potentials in trading options, but I'm not good enough to be talking about options yet because I'm just learning. Actually, I'm learning from a couple of our community members. They're teaching me. I mean, Nasser is one of them that is emailing me and giving me strategies.
Stephanie, just to answer your question quickly, when you change your stop loss position, does that count as another ticket? So if I understand your question, the answer is no. So if the trade doesn't execute, you can put in a stop and then remove it as many times as you want. A limit order, a range order, as long as the trade doesn't execute, that doesn't cost you any money. It's only once it executes and you either buy or sell shares that you get charged.
Yeah. Nigel is asking about strategy difference in time frames. So obviously, the shorter the time frame, the faster your execution and your trade management has to be. So when you're trading in 1 minute, then you have to be really quick. Your hands has to be on the hotkey, and you have to act fast. But if you are identifying a trade based on 15 minutes, 13 minutes, and 20 minutes, you have to also give it more room and be more patient because the nature of the trade that you're taking is a longer time frame. So you can't find an opportunity, a trade for 20 minutes or 15 minutes, and then you just quickly get in and out constantly. So you're just contradicting yourself. The share size is also important. When you're taking a longer time frame, so you might want to take a smaller share size and give it more room to get to the profit. But when you're trading on a smaller share time frame, you can take a bigger share size because you're taking a smaller profit. Like you go 1,000 share and you get 20 cents, that's $200. But if you want to go and get $5 in half an hour from a big drop, you don't want to go 1,000 share because the time frame really needs you to be more patient and give it more room for fluctuation.
So Eamon, you're asking, is this our Eamon from the room?
Yeah, I think he's...
All right, Eamon. Well, I know the question's directed to Andrew, but let me answer it first. So how long did it take to become consistent? Let me tell you, I've been day trading full-time for a little over 2 years now. I said almost 2.5 years, and I've been a trader for 20 years off and on. I am still working at being consistent. I've found that, unfortunately, I've become streaky. I'll have these great runs of very successful trading, and then suddenly I lose the feel for the market, or I haven't yet figured out what goes wrong. But to me, I am not to the level of consistency that I want. So it takes a while. I said I'm still working at it. So it's not an overnight thing. Andrew?
Yeah. So Andrew Morgan is asking about commission and CFDs. I mean, CFDs, CFDs are not real trades. I mean, these are not trades that they're not really executed. These are a deal that you make with your broker. So you essentially shouldn't pay any commission or ECN fee when you're trading CFDs because these orders really don't get filled. There is no ECN fee. There is no commission. But some brokers charge that, and that's the source of revenue for them. I think CFDs are now these days are less and less relevant because of the less commission structure. In the past, when commissions were so high, brokers said, you know what, let's not fill the order, you do it with me, and then, if you lose it to me. If you win, I give it to you. Let's not trade with the market. But I think in these days, really CFDs are less and less relevant, and you can trade really with the market, which is highly regulated. It's and it's very, very low cost. And as I mentioned earlier and a couple of times during that, the commissions has been really, really negligible in trading. With these new commissions that we have for people who are really well capitalized for the trading, like anything over $10,000, the commission is really irrelevant for you.
Yeah. Yuri, you're asking how you speed up the process. First, I'm going to caution you, right? This is not a get-rich-quick business. People will try and sell you that. I am absolutely convinced that it's a path to losing your money, not making $1 million. So first, don't try and short-circuit the process, right? It takes a lot of learning and a lot of knowledge. But the best way you can, the way you can go fastest, frankly, is develop a plan and a strategy and stick to it. Reevaluate your strategy on a regular basis. That should mean at least weekly. Am I on track? Am I achieving what I thought I would? If not, adjust your plan. But don't just go in and just try and read a lot of stuff and then start trading. You have to have a strategy as to what you're going to do, how you're going to accomplish it, and that strategy is different for everybody. So I can't go into more detail here, but in the room we talk about this a lot. So it's a great place to sort of learn that. But I mean, just go to our YouTube. And there's a lot of information there about creating strategies. And of course, in our room, we have a ton of training material that'll help you build your strategy.
So there are a couple of quick questions. Javad is asking, have you ever thought about writing a code to write trading based on a strategy? The answer is no. I don't want to write an algorithm to trade for me, but I personally have some ideas about finding an indicator to help me to make my decisions based on time and sales and order flow. Because last year when I went to Trade Ideas event, Dr. Brett Steenbarger gave a presentation about hybrid trading. And the future of trading is not going to be machines, and it's not going to be only traders, but it's going to be a hybrid of artificial intelligence and the real intelligence that human brain has. So I think the future of the trading is the combination of both. So now if you imagine all of these platforms and indicators that we have, they're helping us processing data faster. I am personally thinking of starting a company or a project as a pet project for myself to come up with some indicators that help me to make the decisions, like a signal or something that help me, okay, now maybe this is the time for a short, or maybe this is the time for a long. And by the way, speaking of Dr. Brett Steenbarger, I think Robert and I are going to have a podcast with him on trading psychology and the future of trading for traders in July. We'll be in touch with him, and he was kind enough to accept that he's going to do a podcast with us. We posted something on our forum, and the guys are going to put the link in the comments now, and also I'm going to announce it tomorrow in the chat, that if you need anything from him, if you have any questions, if there's any topic that you need to discuss with him, just post it on the forum. I'll share the forum with him later, and we try to bring up that topic with Dr. Brett Steenbarger.
There you go. Well, on that note, guys, we're pretty much out of time here. A couple things I did want to mention. We do a number of events as well. So within the room, we tend to do local events. I know, Matt, you're asking a question, how do you meet people who think like you in different areas? We often have regional events. And one that's coming up is in Montreal, Canada, because Andrew is actually one of the presenters at the Modern Traders Summit, which is happening on the 22nd. That's just about a week away, a little over a week away in Montreal on a Saturday. And the night before, on the Friday, we'll be doing a meetup, and it's open to anybody. I think from our website you can probably find the exact location. I don't even know where it is in Montreal, but it'll be at a lovely place where we can get drinks, we can talk trading, and you can meet with like-minded people. So hopefully we'll be able to see some of you there in Montreal. We also are planning actually a live event, which we're looking forward to. Now, this is in early stages, so we haven't really got the details yet, but we're planning to do a live event probably in Las Vegas in the fall. That'll be a great event actually to get people together live. We'll be sort of trading live right there with you, in front of you. We'll have some education and obviously the opportunity to network with other traders. So stay tuned as we'll have more information on that.
Yeah, excellent. Well, thank you, Peter. Just one thing that I'll be in Houston on this Sunday. So if you're around and if you want to have a breakfast, I'll just have one day layover there so I can meet you in Houston. I don't have any plan, but you can post it on our forum. In Montreal, I want to talk about risk management, and there's a lot of questions about risk management. I want to focus on my my presentation on risk management, because the summit is not about day traders. There's all other sorts of traders there, but I just want to have risk management topics that, because I think it's very applicable to also all traders. It doesn't have to be a day trader to have an understanding of risk management. Having said that, that's it for me. I just wanted to thank everyone for coming, and hopefully I'll see you tomorrow morning in the chat. If not, feel free to email me anytime, andrew@bearbulletraders.com. And if you've read my book and if you enjoyed that, or even if you didn't enjoy it, I really appreciate an honest opinion on Amazon. If you can review that for me on Amazon, because I read every single review, and I also try to implement and update the book based on the feedbacks that I'm getting from users. So I know it takes a little bit of your time, but it means a lot to me. I really appreciate that. Having said that, goodbye everyone. Peter, over to you.
Hey, thanks everybody. Thanks, Andrew. Look, thanks for joining us, and we hopefully will see you in the room soon. Have a great evening and safe trading out there. Good night, everyone.
Bye, everyone.